everybody, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy for 2023. And without further ado, I say let's just jump right into it. The first company we have is Eli Lilly, ticker symbol LLY, and this is a company that I personally own in my portfolio. Eli Lilly specializes in the creation of pharmaceuticals, which is a remarkable market. Right now, the LLY share price trades at $360 per share, while analysts believe the company should be trading between $268 and $446. This is an absolutely amazing company which is primed for growth, which is why I would say that it's worth their current premium, and that's why their current share price, in my view, is justified. For instance, let's just highlight two of their upcoming pharmaceuticals. One is an Alzheimer's drug that shows very promising results, especially compared to other drugs by their competition in clinical trials. On top of that, they are also very well positioned in the type 2 diabetes market, which is likely to grow for many years to come based on the diet of Americans. Besides that, this company is very well diversified within the pharmaceutical industry, and I can see a lot of potential upside and increase in profit for this particular company. That's why I think the LLY share price is a very attractive stock to buy right now, and overall they have a great company that is primed for long-term growth well into 2023 and beyond. The next company we're going to talk about I'm not very excited about, and that is Flowers Foods, ticker symbol FLO, and I don't really like this company because I don't think it has a lot of growth in it. However, if you are a dividend investor, there could be made a case for this company. This essentially is a bakery that has pretty good fundamentals, and they consistently beat on overall projections. However, their top of the line growth is only around 12.7%. Now, the real main draw to this company is that they offer a dividend yield of 3.04%, which has excited many dividend investors. Right now, the current FLO share price trades for $29, while experts believe the company should be trading between $27 and $33. Moving right along here to another company that I personally like, and that is going to be Meta Platforms, ticker symbol META, which trades for $122, while professionals in this particular market believe the company should be trading either at the low end $80 and at the high end $392. Meta Platforms, ticker symbol META, can be regarded as a failing company by some, but I think those people are absolutely wrong. The reason I think that is that this is a huge technology company, and even though not many people seem to be interested in the metaverse, this company is still primed for future growth. For instance, if you're not familiar with this company already, Meta is essentially a technology company that owns social media companies and various other apps such as Facebook, Instagram, WhatsApp, Messenger, and many others. Right now, they're valued at just 11 times their earning, which is a huge discount from what they were trading at before the stock price decided to fall. Now, many investors will say that the metaverse is a flop, and I would actually agree with them. However, even if we overlook Meta's spending on Reality Labs, we can see that Meta is an absolute cash cow, and they should experience a lot of upside for their share price in the future, and that's why I think this company is radically undervalued right now, trading at just 11 times earnings, which is a huge discount from their historical accounting ratios. So that's why I really like Meta Platforms, and that's why, again, I am personally involved and invested into this company. Up next, we have another dividend favorite, and that is Walgreens Boots Alliance, ticker symbol WBA, which trades for $41 per share, while professionals believe the company should be trading between the range of $36 on the low end and $54 on the high end. Walgreens Boots Alliance is more of a dividend company and not necessarily a growth company. But the great thing about this company is that they have a solid business model, and they have over 9,000 retail pharmacies which provide healthcare services in the United States as well as the United Kingdom. They also offer a very high dividend yield of 4.68%, which is much higher than their competition of CVS Health, which only has a dividend yield of 2.12%. So overall, if you are a dividend investor that wants a very solid dividend growth company, then this could be the company for you. The reason I say that is because Walgreens has raised their overall dividends for 46 years in a row, and they also have a very good payout ratio of 43%. So if you are looking for a stable company for passive income, then this could be a great option for you. Now, I personally do own this company, but I'm not buying more of this company right now. It has more of just a hold rating in my opinion. Up next, we have another company, which is an insurance company named Aflac, which you've probably heard of. Again, this is another holding opportunity in my opinion. I personally am not buying it right now, but I want to make sure that you're aware of this company, and it could be on a watch list depending on your own investing style. The current share price is trading at $71 per share, while experts believe the company should be trading between $54 at minimum and $80 at maximum. Aflac is a very well-known household name, and they are one of the largest insurance companies in the United States. The company has proven itself to be very resilient even during times of stock market downtrends and macroeconomic uncertainty like we are facing right now. The company has very strong investment-grade credit ratings, which assures its various investors that it can meet its debt obligations as well as pay its dividend, which currently comes in at a dividend yield of 2.37%, which is really not that bad. On top of that, I like how Aflac has consistently outperformed analysts' projections by bringing in growth around 21.5% year to date. So overall, I would say that is pretty good. But as of right now, this company is just on my watch list. But depending on your investing strategy, you may really like this company when you do more research. On top of that, I also want to say that this company is very good for passive income, and it has a good mix of growth because they have increased their overall dividend yield for the last 39 years consecutively. So clearly that is extremely impressive. The next company we're going to talk about is Intel Corporation, ticker symbol INTC. Intel is most known for developing microprocessors, or rather just computer processors in general for personal computers, and this company is well beloved by many people. However, they do face strict competition from Advanced Micro Devices, also known as AMD. The company's share price has currently declined pretty substantially. However, their dividend yield is very impressive, coming in much higher than other technology stocks at around 5%. Despite this sell-off, many investors think that this is just a better buying opportunity for the stock, which is why it's becoming a quick favorite of investors for 2023. Right now, the current share price is $28 per share, but experts believe the company should be trading at the lowest point around $18 and at the highest point around $72. So clearly there's a huge discrepancy. Now, I myself currently do not own this company. I actually own Nvidia and AMD, which I think more than make up for my lack of Intel in my portfolio. However, with that being said, if you want growth as well as dividends, you could look further into this company. As of right now, I'm just not really into that, and I want more growth than dividends. But with that being said, with Intel's current revenue levels, their current price point, as well as their very good dividend, this could be an amazing buying opportunity, and they place themselves into one of the top picks for 2023. The next company we're going to take a look at is actually twofold. So we're going to talk about Verizon Communications as well as AT&T, because these are huge communications and wireless carriers. We're going to start off with Verizon, ticker symbol VZ, which currently trades at $37 per share when it should be trading between $31 to $68. Now, I actually think they're pretty fairly valued right now, considering that AT&T is trading at $19 and they should be trading between the range of $9 and $28, which is exactly what they're actually doing. The main draw to these companies is their amazing dividend. For instance, Verizon has a dividend yield of 6.88%, while AT&T has a lower dividend, but both of these companies are pretty fundamentally strong. Now, for me, I actually like investing into T-Mobile, but with that being said, Verizon is just trading at a PE ratio of 8.2 times, which is absolutely insane because these are near their decade lows. So if you want to get these very cheap dividend stocks that also have pretty good growth, why not look into either of these companies for 2023? However, for me, I'm going to go and side with T-Mobile. Overall, I would give these companies a hold rating as of right now. Now we get into some of my favorite companies, which is going to start off the list with PayPal Holdings, ticker symbol PYPL, which trades for $73 per share. However, it should be trading between $75 and $160. So clearly, according to professionals as well as myself, this company is undervalued right now, which is why I personally own it and I give it a buy rating. This is one of the top rated payment processing companies in the world, and it also has a very strong network. Recently, the company's share price has fallen by around 76%, giving investors a fantastic discount to start buying the stock right now. Clearly, I think PayPal stock is very oversold, and Wall Street in general is very positive when it comes to this company. They're very bullish and positive. PayPal is available in most countries, and they support a very wide range of online money transfers and go-to-payment methods across the world. PayPal has very good growth, and I believe they're going to have a good rebound in the year of 2023. So if you want a phenomenal phenomenal growth company that could have a very impressive rebound in 2023, feel free to look further into PayPal Holdings, ticker symbol PYPL. Lastly, we have a very aggressive growth company. Again, this is going to be high risk, high reward, and that is Fiverr International, ticker symbol FVRR, which currently trades for $33 per share. And look at that, it's already trading at the low end price point according to professionals of $33, but it could surge as high as $50 over the next year. This stock has enormous growth potential, and they're really capitalizing on the entrepreneurial spirit by having a platform that offers global freelancing. So the global freelancing market is absolutely expansive, and this market is estimated to be in the hundreds of billions of dollars. So clearly Fiverr International can scale into this very well. Despite that, the current share price has fallen by around 90%, and I think this is a good time to now jump into this company because it's now discounted enough, especially as we enter into 2023. The company is spending a lot of money on marketing to bring in new customers, which again will impact their overall bottom line positively if their advertising is effective. The company is incredibly well positioned to experience high growth, and they're improving their revenue over the long term despite short-term losses that we are seeing right now. So this company could easily be a multi-bagger within the next few years as long as you're willing to hold this company for the next 3 to 4 years. And that's why it is in our top list for 2023. That is our last company. I would love to hear your thoughts down below. Comment down below a company that you love that didn't make it onto this list. Subscribe if you are new, and I will see you in the next YT video.